Hello and welcome to this video. I am Subayal, and in this video we will analyze the Intel stock which trades under the ticker symbol INTC. So first we will provide an overview of Intel's business, and we will also cover the major news. Afterwards we will analyze the Intel stock in two steps. In the first step we will evaluate it via 14 dimensions of value-centric investment feasibility to gauge its viability as a long-term value investment. Later, if our dimensional analysis validates its feasibility as a good investment, we will proceed to the second step and look at the current state of the market through the lens of 6 critical dimensions to gauge if it is the right time to accumulate Intel stock, or shall we wait for the market to offer it to us for a cheaper price. So let me add one important point here. Intel is a dividend paying stock, and on September 17th, 2021, Intel announced a quarterly dividend of $0.3475 per share. So a little bit about the Intel's business. So Intel manufactures and sells microprocessors, chipsets, flash memory, as well as other products and platforms for computation, storage, networking, and other functions. The company's data-centric business include Data-Centric Group, DCG, Internet of Things Group, IoTG, Mobileye, Non-Volatile Memory Solutions Group called NSG, then Programmable Solutions Group, PSG, with the PC-centric business comprised of Client Computing Group called CCG. Now, it derives majority of its revenue from the platform products, which incorporate various components and technologies, including a microprocessor and chipset, a standalone system on a chip, or multi-chip package. Now, according to TipRanks, based on 22 Wall Street analysts offering 12-month price targets for Intel in the past 3 months, the average price target is $53.86 for the Intel stock, with a high forecast of $80 and a low forecast of $40. The average price target represents around 8.6% change from the last price of around $49.50. And now let's have a look at the major developments and news. So first of all, Intel's Q3 earnings have beaten estimates and the revenues are also up. Intel INTC reported third quarter 2021 non-GAAP earnings of $1.71 per share, which beat the Zacks consensus estimate by 54.1% and surged 58.3% year over year. And revenues excluding NAND memory business totaled $18.09 billion that are up 4.8% year over year. The GAAP revenues were $19.19 billion, which were up 4.7% year over year and comfortably outpaced the consensus mark by 5.4%. Intel's top-line growth benefited from strong performance by the Internet of Things and Mobileye business, as well as recovery in the enterprise business of the data center segment. And that is not all, because the smart money is also bullish on Intel. So Kingfisher, one of the most renowned investors in the world, is bullish on Intel, and it ranks 8th on the list of Kingfisher's top tech stocks. So in the second quarter of 2021, Fisher Asset Management increased its stake in Intel Corporation by 5%. The hedge fund holds roughly 31.5 million shares in the company, which is worth around $1.76 billion. The company accounts for 1.1% of the hedge fund's 13F portfolio. Now, before I start the value-centric dimensional analysis, for those who are new to this channel, I am Dr. Subayal Khan, and I try to give you enormous value so that you can use this information for doing your own research. I am not a financial advisor, and this is not a financial advice. The purpose of this video is to provide you with an unbiased analysis of the Intel stock, which will help you in doing your own research and save you many hours of your time, and time, as we know, is the most valuable resource. Now let's analyze the Intel stock through our 14 value-centric dimensions to evaluate its feasibility as a long-term value investment. Here we will look at the key numbers, growth rates, and ratios. Our goal is to see if we can get a score of over 75% over the time frames of 3, 5, and 10 years. We are essentially trying to seek answer to the question how well our analysis converges to the same conclusion as the analysts who have given it a hold on tip ranks, and also on the other hand with what smart money or hedge fund managers are thinking who are loading up on the Intel stock. So let's see to which direction the compass of our dimensional analysis points us to. So let's go ahead and first analyze the Intel stock via the 14 dimensions of value-centric investment feasibility. So first of all, we start off with the key numbers and also the important growth rates over the past 5 years. So looking at the key numbers and also the important growth rates over the past 5 years, we can see that the current market cap of Intel is around 201 billion US dollars. The current PE ratio over the trailing 12 months is 10.8 and the PEG ratio over the trailing 12 months is 1.2. The earnings per shares over the trailing 12 months is 4.94. The price to book ratio is 2.9. The price to sales ratio is 2.6. And the current price to free cash flow ratio is 9.7. And the average revenue growth over the past 5 years has been 7%. The average asset growth has been 9% and the average equity growth has been 6% and the average net income growth has been 20%, which is tremendous, while the average liability growth has been 13%. And now let's have a look at the actual growth in revenues and net income. So the total revenue grew from 44 billion US dollars to 78 billion US dollars from 2010 to 2020, and from 2015 to 2020 the revenue grew from 55 billion US dollars to 78 billion US dollars. Also, as we can see, the net income grew from 11 billion US dollars to 21 billion US dollars from 2010 to 2020. And as far as the growth in free cash flow is concerned, it grew from 11 billion US dollars in 2010 to 21 billion US dollars in 2020. And now let's see if Intel can pay its long-term liabilities with the cumulative free cash flow from the past 5 years. So looking at the graph, we can clearly see that Intel can pay its long-term liabilities not just currently, but also over the past 5 years it has been the case. And that is why we can see that the graph has always stayed over 1. And now we look at the average, minimum and maximum ROE and ROIC over the past 5 years, which is shown by the graph in the middle. We can see that the maximum ROE of 29% was recorded in 2018 and a minimum ROE of 14% was recorded in 2017. And during the past 5 years, the average ROE has been 23%, which is great for a company of this size. Also, we can see that the maximum ROIC of 21% was recorded in 2018 and minimum ROIC of 10% was recorded in 2017. And during the past 5 years, the average ROIC has been 16%, which is again satisfactory for a company of this size. And now we look at the diluted shares outstanding to see whether they have been increasing or decreasing during the past 10 years. So the total shares outstanding have decreased from 6 billion to 4 billion during the past 10 years. And during this time frame, the maximum shares outstanding were recorded in 2010, which was 6 billion, and the minimum shares outstanding were recorded in 2020, that were 4 billion. And as far as the PE ratio is concerned, in 2016, the average PE ratio was around 14.1. And in 2017, the average PE ratio was around 20.9. In 2018, the average PE ratio was around 14.9. And in 2019, it was around 15.2. And in 2020, the average PE ratio was around 9.7. We still have some months to go in 2021, and we will look at the PE ratio range for 2021 in the second part of the video during the analysis of market state via 6 dimensions. And we also want the total assets of a firm to be greater than total liabilities, and as we can see, the total assets have always been greater than the total liabilities in the past 10 years, past 5 years, and past 3 years. Now let's have a look at the overall score of the 14 value-centric dimensions over the last 10 years, 5 years, and 3 years respectively. These scores show the feasibility of a stock as a long-term value investment. Feel free to pause the video if you want to look at each one of these dimensions and the results of it in a certain time frame. So we get an average score of 71%, 79%, and again 71% over the past 10, 5, and 3 years respectively. So we get an average feasibility score of around 75% over all the 3 time frames, which is excellent. Since the dimensions act as a strict filtration process, as we can see by the thresholds of values or criteria that we considered for each dimension. And now is the time to proceed to the second step, where we will look at the market state via 6 dimensions to see if it is the right time to buy or shall we wait. These 6 dimensions are hedge fund activity, insiders activity, overall perception of investors, news sentiment, past price action, and PE ratio, range, etc. So first of all, we look at what the smart money thinks, meaning the hedge fund activity, so that we can see if the result of our analysis contradicts with the opinion of hedge fund managers or not. So looking at the hedge fund activity, we can see that the smart money or hedge fund managers agree with our investment feasibility score, and they are accumulating the Intel stock considerably as the price is going down and the market sentiment gets more negative, and surprisingly, the ratings of analysts are going down. So the result of our analysis is supported by the activity of hedge fund managers or smart money. And now let's have a look at the overall perception of investors. So we have to be more cautious here, since the common opinion that represents retail investors mostly is not right most of the times. In case of Intel, there has been an average decrease of 3.6% in average holding size of Intel stock in the past 7 days and a 0.5% decrease in the last 30 days. And now let's have a look at the insiders activity. As far as the insiders activity is concerned, there is no trend towards the sell or the buy side, and the buy and sell transactions seem to balance out each other. Hence, this dimension does not provide us with any clue that will help us in making our investment decision. And now let's have a look at the news sentiment. As far as the news sentiment is concerned, the coverage of Intel in the media has been substantial and considerably higher than the sector average. And in the past week, most of the articles have painted a gloomy picture, and it is shocking to see that as the smart money accumulates Intel stock, the media has been inclined towards the bearish side, and a whooping 80% of the articles that were published covered bearish news against the sector average of 35%, while just 20% of the articles that were published which covered Intel painted a positive picture of Intel against the sector average of 65%, which is astonishing since the hedge funds are loading up on Intel stock and they are accumulating. And as far as the current price is concerned, we can see that the Intel price is falling off the cliff due to the news regarding the shift of Apple to its own chips and competition from other key players like AMD. I never catch falling knives, and I will like the price to correct further so that I can start accumulating at lower prices and initiate the dollar cost averaging process to accumulate in small chunks over time. And the PE ratio has been significantly down and below our threshold of 26 2019. So definitely the stock has been on sale since 2019. And if the price chart was not looking like a falling knife, I would have already started accumulating, but since I can see further downside in the price due to the recent price action, I will wait and start accumulating when the price becomes stable at further expected lower levels. So what is the conclusion? So based on our two-step analysis, I believe that the Intel stock is an excellent long-term value investment, and I will wait for the market to offer it to me at further lower prices, since this is what the chart shows me. Since a steep fall in price shows that the probability of further price drop is higher, and I need to be patient at this price, even though, as I mentioned, it is already on discount due to very low PE ratio, and the opinion of hedge fund managers and our analysis are perfectly aligned and contradict with that of analysts. Please let me know in the comments below, do you think that Intel stock is a good long-term value investment or not? Also, would you buy the Intel stock at current price or not? I hope that you like the content of this video. If you would like to see such videos with my unbiased opinion and my own unique style of analyzing stocks, please drop a like, subscribe to my channel, and I will see you in the next video. Bye.